Thank you for joining me in the Wendell Effect. My name is Brandon Wendell, Chartered Market Technician, and I'll be your guide through the stock equity indexes for the week of May 21st. Before we get started, though, I need to remind you we're not broker-dealers or investment advisors. We're going to look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities, giving any personalized recommendations. Past performance is no indication of future results, and there's always risk involved in the markets. You should never trade with money you cannot afford to lose. We are also not subject to trading restrictions, so we have a position in a security or initiate one at any time. You can stay in touch with me by email, brandonwendell.cmt@gmail.com. You can also find me on Twitter @TraderBdub. And please, if you could, hit the like and subscribe button to help me out, and maybe even get the alerts as well for the Wendell Effect on the videos. So again, we're going to do sector performance, some ETF analysis, look for some stock opportunities possibly for the week of May 21st. And taking a look at the last 6 months, you can see that it's still looking like a bullish market. We did pull back a little bit in communication services, I think it was, and also technology, but then they became strong again. So it looked as though we were getting the flight to safety, which is normally staples, healthcare, and utilities, but it changed again to bullish market, and that's a lot to do with the NASDAQ's rally. So if you weren't familiar with that, you can take a look at my other video on the equity indexes that I talk about that. Looking at the last month, still very strong. You can see we actually had a little dump off on the inflation play in energy, and also, again, the safe haven, the utilities. They don't do well anyway if interest rates are rising, but the healthcare and the staples usually are safe havens, and they've been kind of non-players. So looking at the XLY, this is something I said we shouldn't really be involved in, and I was a little wrong. We got a little breakout towards the end of the week when the markets rallied quite a bit. Technology actually led the rally with the NASDAQ as well. But this will be interesting to see if this becomes a bearish harami. You've got a small candle inside the large candle. We are above 60, so if it's a pullback, it might just come back to the origin of the breakout before it goes higher. We're still bullish to neutral on this sector. Looking at communications, you can see there it broke out. It gave us some warnings. We had a divergence here, pullback, but we didn't go into bearish territory. There's higher low, and then, of course, higher high before we broke out. And I was looking for that run anyway, at least to 61.05 and then ultimately 64.13. If this rally keeps going, I expect a little pullback first before it goes higher. Technology also, the first one I was looking at was consumer discretionary. I was talking about, I called it technology. It's just consumer discretionary that rallied. Anyway, this is technology, and this is much stronger. As you can see, we kind of broke the trend and broke out to the upside and broke the 60 on the RSI to show it's a real breakout. We got a little bit of indecision on Friday, but it might just be a small pullback before we go higher. So this is still a bullish sector, and it looks like it wants to continue to go to the upside. The materials actually bounced off this demand and kind of stayed there. It didn't really go anywhere. You can see we didn't really have good bearish momentum to take us in either direction. So this looks like it could just be flat and again going sideways for the materials. Energy, we saw a bit of a sell-off, but towards the end of the week, we had a positive divergence here actually on Tuesday, and it was confirmed with Thursday's high. We had higher lows, higher highs, and of course Friday popped a little bit, but unless we can put in a low that is above 40 on the RSI, where we close above that on the daily, I wouldn't expect a reversal. And even if we do, it's going to get caught up at the 84 area. Overall, so far, this just looks like a small correction before continuation down. Looking at the consumer staples, this is falling. You can see that we started pulling back. We had the negative divergence, tried to rally, but instead corrected down to 38%. It is trying to fight to stay up. We still have not put in a peak below 60 on the RSI, but if we do, then we're going to drop further. We could still drift downwards towards the 50% retracement to 74.84 this week, where you're probably going to end up moving a bit sideways to slightly down. Looking at, there we go. XLV healthcare, you can see that we are stuck right now. We pulled back and it wanted to go to the upside, but it really doesn't have much momentum. We don't have momentum to go down. We don't have momentum to go up. I think we're just going to be a bit sideways this week, and I'd look elsewhere for opportunities. Looking at utilities, he's jumping on me there. Hang on, sorry. Anyway, looking at utilities, this became much more bearish. As I said before, it doesn't perform well in rising interest rate environments typically. And we had warnings. You could see we had negative divergence followed by the peak below 60. Then we drop below 40. We may get a small rally before it continues lower, but I think we're going to be heading back down towards that 63 level on utilities. So this should be a bearish sector this week. In financials, this is actually trying to rally a little bit. You can see it doesn't have enough momentum to give us good highs, but it also isn't very bearish anymore. This looks like it could be bouncing around between 33 and 31 for the week. Good for day trading maybe, but not for longer term swings. And finally, real estate is starting to soften a little bit more as well. We still don't have that breakdown below 40 for the momentum break, but you can see after Tuesday's drop, we just went sideways. It looks as though we're building momentum to drop yet again. So I think that sector is going to get weaker. Following up with some of the trade ideas that we had from before on XEL, I think, well, you can see it came into the demand, but I was saying this was getting a little weak, so you might need to tighten the stop or take your profits at about break even. You can see we came back in and went below 40 as we came into that demand, and that was it. We ended up breaking down. So, it signaled before it dropped, and I warned about that. EPAM on the 4-hour chart, unfortunately, it doesn't look like it's coming down to us yet. You can see we're just kind of going sideways. Momentum is dying off. It may still kind of drift lower, but unfortunately, I just don't think it's going to be a great trade to long side even when it does hit demand. So we're going to pull the plug on that. And again, you can see it just kind of drifted a little bit higher. I don't think it's going to move down to our entry. For new trade ideas, see, we got Amazon, 21st of May, 100% of the time from the 21st of May till July 19th. This has been a bullish stock for the last 10 years with an average return of almost 13%. It's crazy. So we can look for a good opportunity. We actually do have a little bit of demand there from 109 to 112 area with the stop obviously below. There's another one just below that in the 101 to 104. Now the supply zone at 121 has been tested, so we could maybe bounce off that and break through if we come up to it again. I'd expect it to go deeper than these prior highs. And if you can hold on, great. If you need to take profits there, fine. The first target really is this 129.5, and then the second target is before 140. So keep an eye out for that. And of course, the seasonal window closes about the 19th of July. So we've got all of June and some of July to be able to look at this as an opportunity. Anyway, that's it for the trade ideas. If you've got any questions, again, email me, brandonwendell.cmt@gmail.com. You can also find me on Twitter @TraderBdub. And please hit the like and subscribe. It helps me out a lot. You can get the alerts as well for the videos on YouTube. And until next time, everyone, trade safe, trade well. Thank you for watching and supporting the Wendell Effect.